Good afternoon, everyone. Welcome to today's press conference here at the Foreign Correspondents Club of Japan. I'm Anthony Rowley, First Vice President, and it's my pleasure today to introduce our guest speaker, who is Mr. Nobuyuki Hirano, who is President and Chief Executive Officer at Mitsubishi UFJ Financial Corporation. Group, I should say, so sorry. I was I'm sorry, I was under this slightly mistaken impression from what I was told originally that the focus of Mr. Hirano's talk was going to be on the overseas presence of Mitsubishi UFJ, but in fact our speaker is a man of many parts and is able to speak on a far broader front, as it were. So he will talk about the Japanese economy in general. He will talk about Japanese monetary policy, perhaps global monetary policy to some extent. He'll touch on the position of Japanese banks in an environment of QQE, and various other aspects connected with banking. So I'm going to leave him to explain all that. He's the expert after all. I'd just like to say that he's a man of with considerable international experience, and he's a veteran among Japanese bankers. He took over as chairman of the Bank of Tokyo Mitsubishi UFJ in April this year, and is also, as I've said, president and group CEO of Mitsubishi UFJ Financial Group. He began his career more than 40 years ago working at the domestic branch banking offices of Mitsubishi Bank. He later developed that career in Europe and New York, and held a variety of positions within corporate banking and global strategy planning. Following his return to Japan, he likewise held a number of high-ranking positions in divisions related to corporate banking and corporate planning. You have a brief biography of Mr. Hirano in front of you, so I won't take more time on that. Please join me in welcoming our speaker, and please, the usual reminder, if you could switch off your mobile phones or put them onto silent mode as a courtesy to our speaker. So thank you very much.
Well, good afternoon, everyone, and I'm so pleased to be here and address the what my friends talked about to the correspondent who is actively engaged in the reporting of what's going on in Japan. I really admire your quite intensive efforts, including the one visitation to my house during the evening or in the early morning. Now, what a day it is today. I mean, the U.S. equity market renewed its highest, and Japanese stock hit the 19,000 yen this afternoon. It's a kind of, the exciting moments. However, by definition, a banker needs to be objective and perhaps conservative. So let me go through the documents I delivered to you, and then I'd like to open for question. Now, as you can see on page 2, today I'd first like to talk about Japanese economy, which is the home market of MUFG's activities and the subject that you cover every day. Then I will touch upon some unique situations that the Japanese financial industry faces before I finally introduce MUFG's business strategy to you. Turning to page 4, let me start my discussion about the Japanese economy by first quickly commenting on the recent fluctuations in the Nikkei stock average and exchange rates. As shown in this chart, the financial markets have reached in large peaks and troughs at various events since the global financial crisis, such as aggressive monetary easing, which was introduced as a part of Abenomics, the 2011 earthquake in East Japan, a consumption tax hike, and this year, the introduction of negative interest rate policy, Brexit, and the US presidential election. So, of course, the Japanese economy has gone through a series of tumultuous periods over the past several years. However, what comes to mind is a fact that has been slowly revealed over these years. It is the fact that whether in a good sense or a bad sense, the fundamentals of Japanese economy have not changed very much. The chart on the left shows the recent development of Japan's real GDP. As you can see, the Japanese economy experienced a big slump after the global financial crisis, but since then, it has managed to control each contraction to a limited extent and has generally followed a stable and modest growth path, despite many adverse events. The chart on the right depicts the unemployment rate and the number of bankruptcies. We can see a moderate and consistent improvement that has continued over the past 7 years. By just looking at this chart alone, you would not know that there had been many big policy changes and fluctuations in the financial market during those years. In other words, the steadily improving employment and business environment in Japan have not changed fundamentally as a whole since 2010. Page 6 shows a breakdown and a comparison of real and nominal GDP of Japan. From this, we can easily see that exports and government expenditures are on an upward trend, both in terms of real and nominal GDP. This is easy to understand given the higher growth rates of the world economy relative to the Japanese economy in terms of exports and the increase of healthcare costs on government expenditures associated with an aging population. But what is intriguing is how private consumption performs. As shown in the charts on the left, despite the declining population, Japan's real private consumption maintains an upward trend, thereby supporting the growth of Japanese economy as a whole. Although there was a lull after the latest consumption tax hike. However, when we take a look at the nominal figures, we see that growth of private consumption has almost been flat, and it appears to dominate the overall trend of nominal GDP, which has also been flat. The difference between real GDP and nominal GDP can be explained by price developments, which are often discussed in relation to monetary policy. The charts on the left of page 7 shows changes in the consumer price index and the private consumption deflator used in the national accounts. If the stabilization of prices is an objective of central bank's monetary policies, one would think, looking at this chart, that the Bank of Japan must have realized the irony of ultimate price stability. In this world of ultimate price stability, Japanese households may make decisions in nominal terms based on nominal budget, which have remained almost flat for decades, as you have seen. The word stable or flat can also be applied to businesses' capital expenditures and investment. The chart on the left compares current profits of the listed companies. Oh, that's on page 8, by the way. This chart compares current profits of the listed companies with the Nikkei stock average. We can see the stock prices moving in tandem with current profits. However, if you compare capital investments, current profits, and amount of sales, as shown in the chart on the right, you can see that capital investment has been mostly flat and has a stronger correlation with the amount of sales than with current profits. Since the amount of sales represents final demand, this means the Japanese companies are not yet convinced by the Japanese economy as a whole and are not increasing their capital investment despite a rise in current profit. Turn to page 9. So far, I have shown you that the Japanese economy has remained largely unchanged while weathering a great deal of turbulence over the past few years. Of course, a lack of acceleration in growth is frustrating, but on the other hand, it also points to a solid, stable economy. That's the reason why the Abe administration's approval rating has remained relatively high, as shown in the chart on the left. This point is further supported by the Cabinet Office's survey, which shows the social satisfaction level has risen since the start of the Abe administration. We have just witnessed the American people seeking a change, and earlier in this year, the British people denying the status quo and voting for Brexit. Therefore, the current situation in Japan is in stark contrast to that of the States and the UK. I imagine that some of you came here to explore the terrible situations that the Japanese economy had experienced during the last 2 decades. But I'm sure that many of you have found that stagnation and stability are two sides of the same coin in Japan. However, when we look at the Japanese economy from a different aspect, stability also means a lack of dynamism. Currently, this represents a most critical challenge for Japan. As the charts to the left of page 10 shows, the potential growth rate of the Japanese economy has been declining for a long time, and there seems to be no clear sign that this trend will end anytime soon. What's most striking is that the anticipated growth rate of listed companies has not significantly improved, even under Abenomics policies. A decline in potential growth rates gives rise to another issue. As we can see in the chart on the right, the cost of Social Security is expected to increase further. And it is apparent that the Social Security system is not sustainable unless the growth potential is elevated or benefits are cut, which in turn scares households into reducing their consumption. Turning to page 11. On the other hand, Japan has the problem of worsening labor shortage amid a continued decrease of productive workers among its population. As shown in the chart on the left, there are already large labor shortages in some industries, such as nursing and medical care. However, the reality is that the decline of the population will accelerate in the future, particularly the working age population, as you are aware. Therefore, one of the urgent tasks for Japan to undertake is enhancing the labor market participation of women, the youth, and the elderly in order to secure the labor force and making an effort to improve productivity while promoting labor saving. In this context, it is encouraging to see that the Abe administration has been shifting the focus of its economic policies towards a growth strategy and structural reforms. This page shows a summary of current Abenomics policies and strategies. They include Japan's plan for dynamic engagement of all citizens, which aims to raise the quality and quantity of labor inputs, and the Japan Revitalization Strategy, which promotes an increase of private investment together with an improvement in productivity. These strategies clearly require a change to households and corporates, and if they succeed, they will lead to a recovery of Japanese economy's potential growth rate and to corporates' anticipated growth rates, which I touched upon later. Earlier. I have to add, regrettably, that it became evident that TPP will not come into effect anytime soon. So far, it is hard to say that what trade policies the Trump administration will finally undertake, but I believe that the countries involved, including Japan, should maintain a firm dialogue with the United States about the significance of free trade. Looking at Abenomics, we can see how important the fiscal and social security reforms are. The chart on the left of page 13 shows the development of the primary balance, which measures to what extent general expenditures are financed by tax revenues. The primary balance has recently improved, reflecting the consumption tax hike and a firming of corporate earnings and household income. Having said that, Japanese financial situation is very severe. As the chart on the right shows, the government runs a budget deficit because of social security costs, obviously. As the incumbent government enjoys a high approval rating, as I commented earlier, it should accelerate its efforts to make social security sustainable. Please turn to page 14. When we consider the various challenges I mentioned earlier and the ways in which we can achieve a breakthrough, I include the fourth industrial revolution and Society 5.0 among these ways. The realization of front-running super smart society, that is Society 5.0, has been incorporated into the Abe administration's recent policies. It aims to create a new social platform in areas such as nursing care and healthcare for the elderly, where ultra-advanced technology is connected with actual society by integrating cyberspace with physical space. This would also involve the application of robotics in care and preventive care and making full use of digital technology and big data. To prepare for the labor shortage, which accompanies an aging population, society as a whole should make an effort to develop labor-saving and unmanned technology such as self-driving vehicles. We will evaluate the promotion of growth strategy in such a direction in full. And we, financial institutions, also need to participate in such efforts. Moving to page 16, I would like to turn now to a couple of developments that are attracting attention in the global financial industry. The first is lower interest rates across the globe, including Japan. As you can see there is a structural trend of declining interest rate in tandem with lower growth rates in some advanced economies. Looking at the money flow of the corporate sector, as shown in the chart on the right, Japan has maintained excess savings since the 1990s, as Europe and the States have since the latter half of 2000. This means that the corporate sector, which is supposed to lead the investment and innovation, has more cash than funding needs, thus driving down interest rates. Turning to page 17, in Japan and Europe, the implication of negative interest rate policies is casting a shadow on the banking sector. Originally, Japanese banks have little room to lower deposit rates, and they are likely to suffer from an adverse effect on their earnings through the narrowing of interest margins, in particular for those banking institutions which are heavily rely on net interest income revenues. In addition, what is often mentioned in relation to low or negative interest rate recently is their impact on pensions. The short-term impact would be an increase in retirement benefit obligations. As the chart on the left on page 18 shows, the decline of Japanese government bond yields and discount rates is a long-standing phenomenon, and it represents a difficult problem that individual corporate pension plans have been obliged to deal with by way of rebalancing the assets to riskier ones, increasing premiums. Turn to page 19, please. Speaking of low interest rates, it's difficult to know what to think about the recent increase in interest rates triggered by the results of the US presidential election. Let me try to very briefly comment on this. I have to admit that the positive reaction of this magnitude from financial markets, including a sharp decline of yen against US dollar, was something which we, or at least I, did not assume. I wish this ultimately changed the agonizing world of low interest rates. However, the recent market rally does not seem to be based upon tangible facts because at this stage it is unclear what a Trump administration will really do. For example, how big tax cuts or infrastructure investments are going to be. As I mentioned earlier, trade policy is one concern among others. As shown in the chart on the right, the decline of manufacturing jobs in the US has accelerated since the start of the 21st century. However, whether it is realistic or appropriate to try to bring jobs back to the States by protectionist trade policies is subject to further scrutiny. I'm afraid that we will not be able to continue to be so optimistic about the US economy as the current market suggests if the US does in fact embark upon a path of hardline protectionism. Please turn to page 20. The second topic is fintech trends. Up until now, fintech companies have focused on the field of settlements and payments aimed mainly at consumers. But they have recently expanded their coverage to encompass all financial businesses, including lendings and asset management, and have progressed in financial unbundling, so to speak. Furthermore, target customers are not just consumers. They have now started to include corporations, especially small and medium-sized businesses. The rapid increase of investment in fintech companies in Japan and the rest of the world reflects the expectations around the future of fintech. Please turn to page 21. Consequently, there is a tendency to emphasize the threat of fintech companies on incumbent financial institutions. On the other hand, financial institutions can expand business opportunities if they have alliances with fintech companies by rebundling as opposed to unbundling. By rebundling, which adopts a highly convenient service on their platform, I believe that building a win-win relationship with fintech aimed at strategic collaboration and mutual growth is an effective strategy. In particular, an expansion of fintech into the corporate businesses, if they would require, that would require an even higher level of reliability, trust, and capital than those are necessary for consumers' businesses. There are not many fintech companies which are well qualified to those requirements. Therefore, I think that they have also benefits to co-work with incumbent financial institutions. In addition, digital technologies have the great potential to advance labor saving and streamlining, which was inconceivable in the past. For example, digital technologies are expected to reduce system costs in many areas by, for example, applying blockchain technology. Another example is RegTech, which aims to efficiently comply with ever getting more complex financial regulation in the world. Meanwhile, we cannot forget that on the other side of digitalization, various risks are increasing, especially cybersecurity. Please turn to page 22. We at MUFG realized that companies' capabilities were limited in dealing with these issues individually. Therefore, we joined FS-ISAC, a US private organization which promotes information sharing related to cybersecurity between financial institutions. As well as this, Financial ISAC was launched amongst Japanese financial institutions in August 2014. It is an organization which provides countermeasures to cyber attacks on financial institutions. It shares information, investigates countermeasures, trains personnel, and performs joint exercise with 280 companies. Turning to page 23, the third point is global financial regulation. At the G20 Antalya Summit in November last year, it was announced that major financial regulation reforms have been completed. But even now, regulatory reviews which have a possible impact on banking business are still ongoing. We hope that the international agreement over the revision of the method of measuring risk-weighted assets, in particular, is expected to be reached soon. Such regulations will be introduced in order to secure the resilience of global financial institutions based on introspection at the time of global financial crisis. However, new regulations should not cause a decrease in financial functions which will obstruct the growth of economy, including the provision of credit. It is necessary to cautiously examine the impact of regulations and the consistency between them while taking into account the entire framework of global regulations. Finally, I will briefly present MUFG, our strategy. Please look at page 25 to page 27, which gives an overview of MUFG and an outline of our strategy. We are proud of our world leading position, which is due to its overwhelming customer base here in Japan as well as overseas, and its cooperation with Morgan Stanley, with whom it has a strategic alliance. Page 28 shows the outline of our strategy. Although the current business climate is volatile, our fundamental strategy to perform a secure base domestically while searching for opportunities to grow overseas has not changed. Please turn to page 29. First, I will cover wealth management in the domestic retail sector. The important thing in this business is how we can help customers' medium and long-term financial asset formation in an environment of low growth and low interest rates. We are expanding our product lineup, which suits our customers' risk preferences, their stage of life, and environment surrounding them. In particular, we are strengthening our platform to distribute equities and corporate bonds underwritten by MUFG's securities company to individual customers through the bank's window. For the services aimed at corporations, we are implementing a business model offering a solution which deploys our group company's comprehensive financial functions, including global network operating in 50 countries in the world. Please turn to page 30. Within our global banking business, we will look first at the US business, where we are implementing various initiatives to become one of the top 10 banks in the future. On an organizational front, in July 2014, Bank of Tokyo Mitsubishi UFJ, our banking arm, integrated its branch operations with Union Bank, which is centered in the west coast of the States, as the first attempt among foreign banks operating in the US market. On page 31, we move to Asia. We are steadily executing our growth strategy in Asia, which is positioned as our second home market after Japan. In April this year, we completed our investment in the Philippines Security Bank. We acquired Bank of Ayutthaya in Thailand in 2013 and made investment in the Vietin Bank in Vietnam before that. These ASEAN countries have deep economic ties with Japan and are expected to see high growth in the future. At present, the performance of these Asian banks is robust. They could be a driving force to counteract current headwinds, and through collaboration with these banks, we would like to develop a MUFG Pan-Pacific partnership. Please turn to page 32. The third topic is asset management and administration. Within the global environment where financial asset accumulation continues, we can expect high levels of growth in this area of business. We see asset management and its administration business as an important area with room to expand. Firstly, on the asset administration front, MUFG Investor Service acquired UBS Global Asset Management Alternative Fund Services in June last year and entered the global top 10 in terms of hedge fund business. MUFG continues to expand its functions and scale mainly through inorganic strategies in this business space. On the asset management front, MUFG have already strategically invested in Aberdeen Asset Management in Scotland, AMP in Australia, and SWSMU Fund Management in China. These operations are fee businesses which have a low capital load, and we are seriously addressing them in order to increase revenues from non-interest income businesses. Please turn to page 33. The final topic is our digital strategy. At the start of this year, we established its Innovation Lab, a specialized organization in order to launch innovative new businesses which use digital and create a global innovation network, including Silicon Valley, New York, and Singapore. We also launched our FinTech Accelerator program for our small, medium startup companies. Furthermore, we are undertaking many projects at global innovation hubs. We have invested in Coinbase, a leading US blockchain company, and we are collaborating with Hitachi in digitalizing checks in Singapore, and also we are working with IBM in Singapore. We are also collaborating with other companies in this space, and also we have strong anticipation RegTech will give us the big benefits. Now we'd like to overcome the challenging climates and achieve sustained growth over the medium and long term. Page 34. In order to do so, we will accelerate implementation of our business strategy, such as improving productivity and innovating our business model. We are striving towards realizing our ambition to be the world's most trusted financial group by maximizing MUFG's comprehensive strength. Therefore, we would greatly appreciate your understanding and support going forward. Thank you very much for your listening.
Well, thank you very much, Hirano, and you certainly covered a great deal of ground and provided lots of meat for questions. So we'll take questions from the working press. Joël first.
Hello, my name is Joël Lejean from the French Radio and Television, RTL. Two simple questions. There was a very passionate debate on the 7th of this month between the president of the LDP, Abe, who is prime minister, and the president of Mincinto, Renho. And the debate was, what's growth? And Mrs. Renho was attacking Abe Shinzo, saying, are you sure that casino brings growth? So I'd like to hear your opinion about casino. Does it bring growth to Japan, and under what form? And second short question, if I may, Anthony. Yes, Brexit. We talk a lot about it in London these days, and I would like to hear your views about the impact for Japanese firms, banking especially. Is it time for you for migration? Thank you.
Okay. Well, thank you for your two questions. First of all, we do not use the word of casino. Instead, we use IR, integrated resort. I think that's a concept in this country. I'm aware there are quite, the heated discussion around this new initiative by Abe administration. My simple answer to you is, I think whether it really helps Japanese society's, the welfare or economic growth depends on how we can tightly control the activities of the casino and integrated resorts. In theory, integrated resorts is the complex of multi-purpose, the facilities. So the hotel, convention center, or theater, and other events, facilities. So if we are successfully manage the casino part, then that will give us the lift. In particular, increasing the visitors from outside, inbound tourism, in addition to already very robust upward trends of the inbound tourism. So I hope the discussion within our lawmakers will bring about the comprehensive package of solutions as I commented. Now regarding to Brexit, it's hard to estimate or forecast the negotiation process and even time frame, as well as the final outcome of the exit. I believe that such uncertainties will persist for some time to come. The good news is that the UK's economy has been stronger than expected as of late. However, with uncertainties still lingering, companies, including Japanese companies, could suspend capital spending or new investment, and also UK households could delay their consumption. I think also the higher price of imported goods due to the weaker pounds could eat away the real purchasing power. So, in general, we have a great amount of concern about the how and when and what is the real implication of this Brexit. I think for banking industry, in particular Japanese banking industries, we need to deal with the reality. In other words, while we carefully watching what's going on, we need to take some actions probably so that we cannot, miss the appropriate timing. Already, many global financial institutions have started to study or conduct the comparative analysis. A multiple number of alternative financial centers in Eurozone, and what the new business model should be, front office operation, corporate function, risk management, and back office operation. So we need to continue those studies, and when outcome becomes clear, we need to make the quick action. I think that's the points.
Thank you very much. And the lady to your right, sorry. Yes.
Mariota from S&P Global.
Sorry, are you working press?
I'm sorry?
Who are you representing?
I am working for S&P Global Market Intelligence, and we are not a rating company.
No. I know what S&P is, but sorry, we give priority to the working press first. So if you could please hold your question for a moment. Journalist first.
I am journalist.
But you're not working.
I already did this talk with your representative lady there, and so
yes.
I don't think it's a good idea to.
I'm sorry. We give.
But no. I am journalist.
Sorry, I must insist. I'm not going to argue. You must sit down, please. We will take you later.
But we are wasting time. This is a simple question.
Sorry. We have rules. We have rules, and we are going to adhere to them. Please sit down. I will call on you when there's no more.
Even if I am a journalist?
Well, you're not international press, are you? I mean, we
are international press. We report news in English.
I'm sorry, no. Please sit down, and we will come to you in due course.
But I don't understand why you reject me.
I am chairing the meeting.
I think I have to ask my question.
No,
and
that
is,
we
understand that.
Please sit down. Please sit down.
Our question is.
Please sit down. Please sit down. We'll come to you in due course.
それはどうして特派員じゃないそれこそ時間無駄にしたと思うんですよ。で、それでごめんなさいこの問題さっきもやってるんですよね。それでじゃあちょっとお話聞きますね。少しいえすごい簡単な質問ですからこれをやってる間にもうできるはずなんですよ。
Next speaker.
Our question is, do you expect any direct impact to your business by Trump presidency in the United States? And what kind of what kind of things you can do to get prepared for that?
That's a very difficult question to answer. I can't respond in a second. But if there are any other participants who would like to ask the similar question, I'm ready to answer.
Well, would you like to go ahead with your question? Maybe it has a bearing on this question too. I'm not sure.
Thank you. My name is Tim Horniak. I'm a freelance journalist here at the FCCJ, and I was wondering if you could talk more about fintech. Mm-hmm. Bank of Tokyo, Mitsubishi is apparently working on a digital currency that will be released in the coming years. I'd like to know, why are you working on this digital currency? Mm-hmm. How do you think it could benefit users, consumers? How do you think it could benefit you guys as well? And just quickly, if I may, what do you think the future of banks will be with all this digital technology? In the future, will we still have bank branches and ATMs, or will everything be mobile and digital? Thank you.
Okay. Well, first of all, regarding the digital currency, we are very interested in its functionality, which gives the substantial benefits to users as well as service providers, such as the banks. However, the current weakness or shortcoming of digital currency, such as Bitcoin, is the lack of trust by users. That's one of the reasons why there are no corporate users at this point of time. So the current usage of Bitcoin is limited to, among the consumer space, be smaller amount of payment services. So lack of trust is one thing. And number two, fluctuation of the value of the currency. Of course, currency's value can change, day over day. That's the same thing, US dollar, yen, or a pound. But the instability in Bitcoin is substantial. So that gives the problem to users. Number three, there are fundamental weakness in the compliance space, such as the terrorist funding or money laundering. So we need to cope with those three weaknesses while we appreciate the convenience and the future function of these currencies. So in order to solve those problems, we decided to test our own digital currency on a private blockchain technology, rather as opposed to public technology. By doing so, we can support the currency by setting the one MUFG Bitcoin as 1 yen, so know the fluctuation of the value, and number two, the reliability and trust behind the system. And C, we will certainly put in place the robust anti-money laundering, the compliance program. So that is our aim to currently work on this initiative. Now, the banking industry in the future, that's a very good question. As I commented earlier, the digitalization of the banking is now moving from consumer banking to corporate space, as well as RegTech and back office, the automation and so on. So I think in every front, business, the operations and risk management, internal control, all fronts will be greatly affected by this application of digital technology. And that will change the landscape of banking industry as well as financial institutions. Having said that, again, the fundamental value of the incumbent banks, including ourselves, is I think the trust and credibility which we built over decades. and we have a quite robust capital. So what I'm trying to do right now is, rather than competing with those newcomers, work with them. That's the reason why we started to make investment into startup companies in digital space these days and try to explore more business opportunities.
Okay, well, as not just moderator of this event, but as an actively practicing foreign correspondent myself, I would like to ask you, if I may, a two-part question. As you said, the outcome of Trump's election is unsure yet in terms of policies, but it does seem that we're probably likely to see a shift from emphasis on monetary policy to more emphasis on fiscal policy, and possibly tighter monetary policies in various countries. Very broadly speaking, and I know it's a rather difficult question, what will be the impact of rising interest rates on the banking industry, in your view? And the second part of the question is, in Japan itself, some people have argued that Kurodanomics, if you like, has been damaging to the banking industry in some respects. Mr. Kuroda himself argues that the banks have benefited from the increase in lending. What is your view of the net effect of Kurodanomics on the banking system? So 2 parts.
Okay. First one, the higher interest rates or possible interest rate hike in many countries from now on. Let me put it in this way. The first, the current, the sharp improvement of the mindsets of investors across the world has certain ground, of course. Getting back to her question, President-elect new policy will give the big impact over a U.S. economy and certainly global economy. The tax cuts and infrastructure investments, as well as deregulation, will be the big gift, big lift to the U.S. industries and the U.S. economy. Having said that, of course, we need to carefully monitor what's going on international trade sides, as I earlier commented, without having the real global growth of the economy. I don't think the U.S. alone can enjoy the all benefits of the global growth, global economic growth. Now, getting back to interest rate issue. Therefore, I think at this point of time, what are the real impact over other part of the world, except for U.S., is not quite sure. I mean, things haven't changed overnight, I'm afraid. So where Japan is in terms of the interest rate environment is not, 180% degree change since the presidential election. So I think, touching upon the second part of your question, the Governor Kuroda will prudently manage his current monetary policy, which is the combination of yield curve control and quantitative easing. Therefore, I don't think there will be a fundamental change of Japanese interest rate environment overnight. But if the U.S. economy start to really get the strong momentum for the growth, and that will spill over to the other part of the world, and then Japanese economy also got the robust lift, then the interest rate environment will substantially change. The same thing could be applied to European countries' interest rate environment. Although ECB announced the decrease of the amount of their quantitative easing policy, but still they extended the duration of the policy. So in Japan as well as in Europe, central bankers will continue to work on what's going on real in each the marketplaces and economies. Now, the last point you commented, what is the impact over the banks by Governor Kuroda's policy? That's very clear. I mean, as I commented in my earlier speech, the lowering interest rates, including the negative interest rates, will shrink the lending deposits margin, in turn net interest income. So that will be certainly the hits over the profitability of the banks and banking system. But what's I'd like to emphasize is the banking system. I mean, Japanese banking system is probably the most stable financial system and stable and sound financial system in the world at this point of time, after possibly U.S. Or as well as U.S. So I think in short term, the banks will make every effort to help themselves and make their business sustainable, even under the negative interest rate environment. That will, I'm sure, enhance the sustainability of their business and probably make the Japanese banks even more competitive if we can make the all appropriate actions to cope with the negative interest rate environment.
Thank you. We are almost up against time, but we have time for one final question. Are there any more questions from the working press? Are you working press? I'm sorry, I can't. Yes, come on, please. Your question.
Good afternoon, Gareth Allen from Bloomberg News. Hirano-san, thank you so much for being here today and for your insights. You touched on it in your speech. Since Trump's election, bank shares have jumped significantly, and in fact back to levels before Kuroda-san announced negative interest rate policies back on January 29. I think the really interesting thing that we've seen in the last couple of weeks is that while some investors are buying bank shares again, there's actually been an incredible increase in short positions on Japanese banks, including your own company and your peers. I'd be very interested to hear what you think about investors that are shorting your company on levels not seen since in the wake of the Lehman shock in 2008, and how you feel about the sustainability of the post-Trump rally.
I would not comment on the stock price of our companies because that's the investors will make decision. But I think a couple of things. The value of Japanese banks have been not recognized as it is. I mean, it's a kind of undervalued stocks. As I commented earlier, the Japanese banks and financial institutions are in a very solid ground at this point of time, with a very strong balance sheet, including equity and asset quality, and revenue is certainly because of the negative interest rate and other issues, declines, but still we are quite solid, stable revenue and income. So my personal view is that the current level of the market price can be justifiable even without the Trump rally or any other external issues. And as for stamp rally, I would say probably the markets move ahead of the reality. I mean, what's real is something we haven't seen. So the price in general moved in anticipation. So what I said is a little, the difference. I mean, first, the fundamental value of a company, and B, the current, movement of the or current activity of the markets. I have those two views. So the fundamental value and the trend is a little different.
Thank you very much. I'm afraid we have to close there. Thank you very much indeed for coming along and talking to us. We're most grateful. And as a token of our appreciation, I would like to give you a 1-year honorary membership. And please, the speaker has to leave quite quickly. So today, no exchanges of business cards.
Sure. Thank you very much. Thank you.